All right, good morning, everyone. You're welcome to Minute FX. Thank you for the subscriptions coming in, and thank you for watching the videos. I hope you've been blessed by it. All right, today we're going to be talking about how to grow a $5 account. All right, how to grow a $5 account. But before we proceed, try as much as possible if you have not subscribed. All right, try to subscribe to the channel. Give us a thumbs up and also comment. All right, if you have any issues concerning trading and you need an explanation, tell the issues under the comment section, and then we will try as much as possible to explain with a video. All right, also click the notification bell to see if when videos drop like this, you'll get notified. All right, so after, let's go to the topic of today. All right, so today we talk about to grow a $5 account. I think someone sent me a message and said, okay, teach on how to grow a $5 account. All right. I think I've done this maybe a number of times. All right. There are things to know about it and the kind of psychology you have to have about growing that account. I'm going to tell you in the video today. All right. The first thing to do is decide the asset to trade. All right. Basically, we go for less volatile asset, all right, so that we don't get burnt heavily. All right, since our account size is small, all right, we go for assets that allow us to trade with a $5 account, right? Basically, assets that their margin are within the account size that we have, all right. So that's just basically the asset we trade, all right. I think assets like that are V75 exams for synthetic indices. V75 is still okay. You can do that. I think majorly the VIX10 are a bit volatile, but not really volatile. You can trade VIX10. You can trade VIX10S. You can trade which other one? You can even trade V75. Yeah, V75 is a very good asset to trade even with a $5 account. All right. So I think that's all. VIX25S is a bit volatile. VIX25X is volatile, but VIX25 is still okay. You can manage that. So I'm just telling you the asset you can trade with a $5 account. And also under boom and crash, I think you can actually trade crash 1,000 with $5. You can trade crash 500 with $5. You can trade boom 500 with $5. And you can also, no, you can't trade boom 1,000 with $5. The margin will not allow you even place a trade. Okay, so I think as of the moment, those are the assets I think you can trade. So you can under crash and boom, you can trade crash 500, crash 1,000, boom 500. Okay, so those are the ones you can trade. All right. Under VIX assets, you can do VIX10, VIX10S, VIX25, V75, V75, 1S, all right? Even V100, 1X is okay, you can actually trade it, all right? So those are the ones I would recommend that you trade, all right? So the second thing to do is to decide your risk to reward ratio, all right? What will your risk to reward be? At $5, I would encourage that you go anticipating a long move, or you start thinking of swinging because you are trying to grow it, all right? So you would anticipate probably a short move using risk to reward ratio, all right? You anticipate a short move using risk to reward ratio, all right? So what's the risk to reward ratio? I will cancel it. All right, you can do 1 to 2 risk to reward ratio. You can do 1 to 3 risk to reward ratio, but I don't recommend 1 to 1, all right? Basically, it means if you have stopped out once, stopped out twice, there is no covering up. So the major one I use is 1 to 3, all right? If I'm risking $5, I'm anticipating making $15 on a trade. So that's how I actually do. So the minimum risk to reward ratio I attempt to get is 1 to 3. All right. So I encourage everyone that wants to grow a $5 account to also go for that. All right. So try as much as possible to go for that. All right. The next one is you have to decide your trade execution method. All right. That one is just basically two. Is either you use, there are more, but I believe is either you use limit orders or you use instant execution. Limit order are just setting your limit and going to rest, or you click buy to buy, sell to sell. Buy to buy, sell to sell is just instant execution. You saw an opportunity in the market, you just buy, and then you move on. All right. So I think that is just that. And the next thing is, that's the number four thing to do, is to follow the rules that guide your trading strategy. Follow the rules that guide your trading strategy. All right. And that's that. Okay, so let's go to the chart. More explanation will come to that, but these are the basic things you have to decide off the chart. All right, you have to do this off the chart. So now let's go to what we do on the chart. All right, coming to 4 hours. This is basically, you have to start from daily. Let's go to daily. Probably let me remove all this. All right, so let's go to daily. Now daily. Yeah, so this is daily. Now you have to anticipate and know what price is doing. All right. All right. What is price doing? All right. Price currently around here, price was falling. And as soon as price was falling here, um, I know that price is coming for a particular inducement, which was here. So this was the inducement I know price was coming for. Right. When you see price falling down, price is going for a particular, inducement. All right. Or a fair value gap. So that's basically what price is always targeting. All right. But below here, there was no fair value gap. All right. So price is coming for inducement. All right. So this is what will prepare me to do whatever I want to do. So I want to show you how you would have done this. All right. So I go to H4. So when I went to H4, because I took a trade and I want to just use the trade as an example for you. All right. So price was supposed to actually come for this as inducement on daily. All right. When I now check H4, I think price was around somewhere here. Yeah, price was around here. And then I wanted price to actually, give me something on M30, basically. So I go to M30. H4 also is coming down, all right, falling down, and structure is still intact on H4 for a buy, all right. So I go to M30. I just want this inducement to be taken, all right. All right. So what happened? All right. So this was the move. I think I have this on my journal. I can't say, but I will check my journal later to find out. All right. So this was the move I was anticipating. This was the low. All right. This low was taken. This low was taken. Then we have inducement here was also taken. All right. So I anticipate that price will come to a zone like this. All right. So assuming I have a $5 account, all right, this is a 30 minutes this thing, all right, price outcome. Now, why didn't I use the whole, okay, let me mark it like this, all right, price should come to this area. Now, because price had to clear inducement, this is inducement, on M32, you need price to clear inducement, which is here. This was the inducement here. So my zone is above this inducement, all right? My zone is above that inducement. All right. So price came into it. All right. As soon as price came into it, I will now go to M1 straight away. All right. Because you are using a $5. And remember, from daily, we know that price is targeting what? An inducement. All right. Then the next thing is to come down to probably H4 to see what price is doing. Then look much more lower. All right. Just to take a sell to clear the inducement. All right. So this is what I saw. And then I will just go to M1 straight away, looking for confirmation for entry. I think I showed this in the mentorship. I can't remember. All right. I explained that move in the mentorship. So remember you are looking for a 1 to 3 risk to reward ratio. All right. Okay, so this was where price tap into that zone. Now, what I'm looking for is a market structure shift to the downside, all right, so that I can actually start trading, which is clear, all right. See it here, price cleared, price broke this place. We have our church around here. This is our church around here, all right. Let me put it there. All right, that's our church. So we have it here. The price came to retest this place, this particular zone here, and that's okay. So if you are taking this trade, I advise you, if you have a $5 account, to risk as much, not everything in your account. I mean, the highest you should risk on this trade is just maybe $1. That's on 1 minute. If you risk $1, you are really doing great. All right. So maximally just risk $1. $1, right? So entry here, stop loss above this 1 minute a little bit. All right. Just make sure your stop loss is a little bit above. All right. You are targeting 1 to 3 on a minimum level, and see it here. This 1 to 3. All right. But my own major target, even as you are looking at 1 to 3, if you are looking at 1 to 3, you would have taken this. Which means if you are risking $1, you have made $3. But my major target is the M30 low. All right. So where is the M30 low? Let's see it. Which was here. So this was where it was. See it here. This is your M30 low. Now let's drag it down to that place. All right, so that's where you are targeting, which means you have 1 to 13. So if you are risking $1, you will have made $13. All right, so it's just as simple as that. Now, don't risk all your account trying to, get what you want. All right, trying to grow the account. Just make sure you go lower time frame, to get it. Make sure you go to lower time frame to get it. After you've taken this trade, all right, and your 1 to 3 is achieved, if you want to break even, you can, but I won't recommend that you quickly rush to break even. If you are not closing partial, then just allow the trade to run. And since you are risking $1, it's still very fair. It means you have to take 5 trades to be able to to blow the account. All right. So that's just how simple it is. All right. So this is about 1 to 19. All right. Which you still have other trading opportunities here. All right. Inducement was taken somewhere around here. See inducement taken here. Price continued downward. It's just you have a lot of trading entries. All right. Just as simple, the same process, no stress, just the same process down the line. All right. So that's just how I grow the account. And basically, if you want to actually what do they call it, start the trade, you have to make sure this first trade is already at break even. All right. When it's at break even, it means you are not losing any money. All right. So break even is fine. And then make sure that the next entry you want to take, because for me, I prefer that the next entry I'm taking, I have enough profits from my first entry to cover up for the losses of the second entry. All right. So if you are taking this entry here, all right, which is okay, but you know, you are still risking here, all right, because this one is just at break even, there's no profit much, all right. So if you are taking any entry here, that means you are actually risking, all right. So you would have been in this trade from here. So I would have been in this trade here. My stop loss would have been somewhere around here, and then my target would have been here, which is about 1 to 5, and that is okay, all right. Then price kept going down, price kept going down here, all right. Okay, just study um, how inducement work. If you want to learn this, it's very easy. So don't disturb yourself. 1 minute is okay. By the time you check your M30, you mark your zone on M30, go to 1 minute for entry, and if it gives you confirmation you need, and then just take your trade and then just relax. All right. So that's just how it is. All right. So I think I'm going to stop here. If you have any problem actually going for it, all right. For the sake of those that maybe are hoping that you know I will continue to the end. All right. So this one is another break of the low. All right. We want inducement to be captured. Let me just show you. Inducement should be captured somewhere around here. All right. Inducement was captured there. And as soon as this inducement was captured, price came into this whole area here. That was where price came into. All right. If you watch my single candle mitigation, you would know what I'm doing. All right. So I would have entered as soon as I saw this. My stop loss would have been around here. All right, which is okay. And then I'll just continue to this place. All right. So that's just how it is. I think I've thought about some single candle mitigation is in the YouTube channel. You can watch it to your own benefit. It's just the same thing over and over. Yeah. So the same thing was applicable here. Same thing was applicable around here. So just try as much as possible to watch the video and then you gain value from it. All right. So that's how to actually grow a $5 account. Make sure you like and subscribe to this channel. All right. Just have a profitable trading week.